How does the new federal budget affect the housing in Canada, mainly in Toronto and GTA? I'm Julian Compton, and we are here with our weekly recap. And so, with the big news that just came out from the federal government with their budget, a few different things, but we'll just kind of stick with the housing market and how it affects us in the GTA mainly. And we'll talk a little bit about the taxing, which will affect investors a lot with capital gains tax that they are bringing in. And then we'll go over our weekly numbers of our areas, of the downtown surrounding areas, Don Mills, Leaside, Mount Pleasant, Yonge and Eglinton, and the Durham areas. So let's get into what the federal government has done with the budget and how it's going to hopefully bring in, what is it, 3.5 million homes by 2030, which is a pretty high number. And with what they are bringing in, I don't know if it will be achievable. But some of the things that they are doing to help with that program is to convert some public lands into housing, a new Canada Housing Infrastructure Fund, and the top-up an apartment construction loan program. So those are some ways that they're going to try and create more homes, and then other ways to try and get people into the market in an easier way. I don't know if it'll be any easier with what they are proposing. So one of the things is that they're going to bring up the 30-year amortization rate for first-time homebuyers, but the caveat is that it's for first-time homebuyers on new builds. And from my experience, not many first-time homebuyers are going out there to buy new builds because you need a bigger down payment and you need just a little bit more money and you need some time too, right? So I don't know if that's really going to incentivize people to actually come out and buy, especially first-time home buyers. So that one is kind of almost a wash, unfortunately. I wish they just extended it to resale, just in general, first-time home buyers, no matter what, you can up your amortization rate to 30 years. And that would be something that would be helpful, especially for first-time home buyers. And then another thing that they're doing for the first-time home buyers is that they're upping the RRSP from 35,000 to 60,000. This is good if you have the money. Again, this is something that I don't know too many first-time home buyers that have that kind of money in their RSPs. There are a few, so I think it will help some people, but again, I don't know how it will help our younger generation that that are just starting, if they're in their 20s, even in their 30s, to have up to 60,000 to take out. It's good that you can take out, but again, I don't know how many people have that kind of money to take out for the first time purchase of a home. So those are some things that are leading towards the housing market that will help a little bit. There are a few other things, and then I can get into that a little bit with you if you'd like. And then another thing is for our taxes. So they are going to be raising the tax on capital gains. So if you are even someone that is trying to sell off their parents' home that have passed, and then you get capital gains on that. If you have more than 250,000, then you'll be taxed on that. So I think about, if you have 500,000 capital gains, you're going to be taxed about $22,000 more. If you have a million capital gains, then you're going to be taxed about $60,000 more on top of what you're already going to be taxed on. So that is something that they're just hoping to try and get the top earners to give back. It might have been a little bit better just to tax the top earners just in general more, just for how much they make. It might have been just a better situation, because there are some people that are not in that tax bracket that are going to sell off an asset that they may have received from something like if their parents have passed, and then that kind of extra 20, the extra 30, the extra 40, the extra 50,000 can go a long way for certain people. So I don't know how beneficial it will be. It might steer off some investors to continue investing in the housing, especially in Ontario and the GTA. That will be something for the future to see. And there are some other things that will kind of affect our economy, and again, bringing in investors. So there is a lot to break down from it too, but those are some main things that I got out of it that would affect our first-time home buyers and our investors and or people that are selling off some things, some assets from their family that they could really need. They could really use that kind of money. So those are some things there, and didn't want to get into too much nitty-gritty. But if you do want to break down some more things, hit me up, and we'll break down what and how these things can affect you in a positive and or a negative way. So this is something that the government is trying to hope to help with the future and their spending that they need to do, which is understandable. And hopefully they will try and bring in some more students, so to kind of weigh out everything that they are doing to affect the investor side as well. So we'll see, and hopefully things will work out. But I think it's not enough, and it's kind of late for what they're trying to do too. So we'll get into our little weekly numbers too. Below you can see a link to kind of see the blog to see the breakdown of the numbers. But we'll just talk about the downtown surrounding area for the freehold side, and then for the condo side. Freehold side, we are seeing a pickup in active listings, a pickup in sold firms. So things are moving. We are in our spring market, I believe, and things are just going to continue to pick up. With Bank of Canada, they announced that they're going to hold rates, but probably in June that we'll see things. They really don't want to lower the rates too soon, because I think it would cause a pretty much a frenzy in the housing market. So I think we'll kind of see our spring market kind of extend a little bit into the summertime, and then maybe things will slow down a little bit before the fall market. For the condo side downtown, again, sales are up and active listings are up, so things are starting to consistently be there. There are more active listings, so therefore more months of inventory, which is good. So there's still some options there, but things are moving again pretty much like 2 weeks for the freehold side downtown and about 3 weeks for condos downtown. Don Mills area, things would slow down a little bit on the sales side, picked up a little bit on active listings. So things are still moving though. 9 days on market for freehold and Don Mills. For the condo side, up to 58 days on the market. Things are picking up on active listings and sales, but it seems like just last week, I think there was 4 or 5 units that were on the market for over 40 days. One was over for 100 and something, but it was a kind of a pre-construction before it registered, and then it registered, so then it sold. So those usually take a little bit longer, so that affected the days on market. Months of inventories are just picking up across the board a little bit, which is good. There's a little bit more inventory, but sales are picking up as well. For the lease side area, we are seeing just that, active listings picking up and sales picking up just a little bit on the freehold and the condo side. Nothing too crazy, but consistent growth there for both active listings and sales. And in the Durham area is where we see the same thing happening too. Prices are going up there in the Durham area. Overall, I think prices are just steadily going up, nothing crazy, but we are seeing some pockets for my clients, seeing some pockets that are going a little bit crazier than we expected. But again, those are the nicer areas, and those are the areas that we expect to see things moving a little bit quicker, especially for certain home types. So that's what we got going on for this recap this week. Really appreciate you watching this far. If you do like what we are doing, please give us a like, share, and or subscription, which would be much appreciated. And then if you are looking for any more information for what's happening with the federal budget and or your home type and area, please don't hesitate to reach out, and I will help you break down things for you. You can hit up the calendar link and set up an appointment. Thank you. Have a great one. Bye.